Hello, I'm YouTuber Crypto. Let's take a look at the market. Let's start by analyzing the daily chart. We have already drawn a trend line that we have been observing for quite some time. Recently, the market has experienced a rebound at this particular level. You can notice that the rebound occurred at an opportune position, precisely touching the trend line before bouncing back. If we look at the volume, we can see that the bears haven't shown any significant advantage during this rebound. Therefore, if we expect a decisive downside breakthrough, I believe we need to wait for more time. To support this view, let's refer to a previous example. Before the previous downside breakthrough, we can see that a rebound occurred as well. If we switch the time frame to a larger one, we notice that a rebound also happened at this level. However, back then, the bearish momentum was much stronger, as evidenced by the volume. Currently, it's not the case now, and the rebound's volume is relatively significant compared to the previous downward move. Therefore, it seems that the market still needs some time for oscillation. Let's measure the time we have spent so far. We have been oscillating for a considerable period, around 91 days. During this time, we have accumulated a volume of 1.2 million units, while the volume at the bottom was approximately 1.6 million units. So, we can measure that we have completed roughly 75% of the process. If we consider that it takes 91 days to achieve 75% of the process, how long will it take for 100% completion? It will take approximately until July 10th for the price to break below the trend line. So, I estimate that it will be early July, probably between July 1st and July 10th, for the downside breakthrough. Now, let's switch it to a smaller time frame. We can observe that the current position aligns with the lower boundary of the previous box pattern. Therefore, the market has paused at this level, which previously served as support, supporting the price several times. The price has encountered resistance here. Personally, I have never considered going long at this position, so long positions are not of interest to me. What I find intriguing is finding a good position for short selling. If we look back at the previous oscillation in a box pattern, the approximate range was between 26,500 and 27,500. Which side has stronger resistance? Definitely 27,500, as it has accumulated a higher volume and more time in the lower region. It's actually a trapped position. Trapped positions take time to break free and are not easy to exit. If we consider the current pattern, let's examine its boundaries. We can observe that the price hasn't broken through them in previous attempts. In fact, in the short term, if we expect a decisive downside breakout, the upper boundary of this channel should not be breached. Conversely, if we reverse our perspective, when the upper boundary of this channel is hit, it could potentially be a good entry point for short selling. I will pay close attention to that area. Now, let's look at the daily MACD indicator. Has it shown any divergence? No, it hasn't. If there were divergence, the MACD lines should be above the preceding trough. What does this mean? Okay, let's see. The trough recently formed is relatively lower compared to the previous trough. However, for a divergence to occur, it should be at a relatively higher position. It should look like this. Therefore, in the daily time frame, there is no bottom divergence. Okay. Based on the current situation, personally, I don't believe there is a possibility of a bullish trend. This upward move is not leading to a bullish trend like before, such as the previous instances of bullish trends, including this one. It cannot lead to a trend, so I personally choose not to consider going long. Furthermore, as we discussed, if we follow a 5-wave pattern, then the current retracement level is already unreasonable. It is inherently unreasonable. For example, let's consider this scenario. 1, okay. 2, 3, 4, 5. Is this possible? No, it is not possible. Because wave 4 has retraced to the end of wave 1. This shouldn't have happened if it were a 5-wave pattern. In fact, if we look at the chart this way, don't you think the proportion between wave 2 and wave 4 is too disparate? Or perhaps the price adjustment period for wave 4 is excessively long. It is stretched out to the point where we have valid reasons to question whether it is an adjustment or a distribution. Alright, thank you. You're welcome to like and share my videos and subscribe to my channel. Turn on the little bell button to show me your greatest support. Thank you so much. Bye-bye.